The ongoing war in West Asia has driven volatility across global equities. Oil prices have surged, inflation fears are rising, and investors are turning cautious. And one of the biggest casualties in India is the country's largest institutional investor, Life Insurance Corporation of India, or LIC. According to Ace Equity, LIC has seen nearly 70,000 crore rupees wiped off the value of its stock portfolio in just a few days. The biggest casualties have been banking stocks and engineering giant Larsen Toubro. So what exactly happened? On 27 February 2026, just before the conflict escalated, LIC's equity portfolio was valued at 14.88 trillion rupees. By 9th March, it had fallen to 14.17 trillion rupees. That's a 4.7% drop. On a year-to-date basis, the portfolio is down 7.1%, translating into about 1.08 trillion rupees in value erosion. These estimates cover companies where LIC holds over 1% stake, indicating the losses reflect a broader market decline, not just a few stocks. The biggest hit to LIC's portfolio has come from banking stocks. Shares of SBI, ICICI Bank and HDFC Bank together account for over one-fifth of LIC's losses, about 15,293 crore rupees. But why banks? Analysts say rising oil prices and inflation fears are the main triggers. Geopolitical tensions tend to push crude prices higher, thereby fueling inflation. That in turn accentuates the risk of higher interest rates. And higher rates can squeeze bank profitability and slow credit growth. That's why banking stocks are often among the first to react to global shocks. Another major contributor to LIC's losses is Larsen Toubro. The infrastructure giant accounts for about 7,609 crore rupees, nearly 11% of LIC's portfolio erosion. The reason is its deep exposure to West Asia. In its Q3 FY26 earnings call, L&T said 75% of its international order book comes from the region. Its global order book stands at 3.57 trillion rupees. Despite this, analysts say the long-term outlook for the L&T stock remains intact. Brokerages like Emkay Global and Motilal Oswal continue to maintain buy ratings on it, though they warn of near-term pressure. The key risk is project delays and slower order inflows if tensions in West Asia persist. Emkay Global estimates L&T's core earnings could take an 11 to 12% hit in FY27-FY28, assuming project delays and weaker hydrocarbon orders. Also, FY26 order inflows could be affected by 10%. The exposure is significant as around 12,000 to 15,000 L&T workers are currently deployed across West Asia. Follow Business Standard for more stories.